Hi everyone, and welcome to today's Forex session. Thank you for your patience as always. We're just sorting ourselves out with regard to the recording, and really just want to really crack on because it's certainly an interesting, as I say, interesting times to be a trader. It's always interesting times to be a trader, but this week in particular is is unprecedented, as it were. Right, but before we start, as usual, may I just draw your attention to the disclaimer that I know you can see on your screens. As you know, this can be a very risky business, so please don't even think of using money that you cannot afford to lose. Right, let's see. Hopefully this will work this time. Yay, here we are. This is me, and David is sitting opposite me at the moment. Those of you who have come along for the first time, we run this in partnership, in tandem. We trade together. We analyze the markets together, and it works very well, actually. We're very different personalities, very different. How can I put it? Well, we're just very different personalities. But the one thing that does unite us, if you like, is our approach to the markets, and that is based on using volume price analysis. And I've had a quick run through some of the attendees to the webinar, and I can see I recognize some names who have actually bought the books and have kindly emailed me to tell me, how much they appreciate them and have helped them in their trading. So thank you so much for taking time out to come and join us today. And volume price analysis is, those of you who know already, is our core methodology. It's something we've been using to trade, invest, analyze the markets. Oh, goodness, for almost over 20 years now. But when it comes to Forex, that is the technical analysis part. Forex is, on the surface, a very deceptively simple market. Those of you who have come in recently to the market will, may have come in on the premise that, it's an easy market. It's a very straightforward market to trade. And in many ways it is, because you can trade at any time. It runs 24 hours. All you're being asked to do is decide whether something is going up or going down. Unfortunately, that's where it just starts. As you soon begin to realize, you've then got to factor in all the other elements that drive the prices that you see on your screen. There's the fundamental releases, and we have some today. I'm looking over at Forex Factory. In all the hoo-ha with Brexit, sometimes the fundamental news kind of gets buried, and certainly today for the UK, we've got GDP and we've got manufacturing production as well. So under normal circumstances, some huge releases, but we've got the political, aka obviously also known as Brexit, and there's politics also involved with other currencies and countries as well. And what we've done is we've put all these things together in different books, and the books are available on Amazon, and we've now put them together in what we call the Forex Trading Library. And it's really everything you need to know to be able to make sense of this really, really fascinating market. It's a box set. It's actually the digital box set, and I believe it's $9.99. Before we start, let me just pass over to David, let him to have a little word in edgeways and see what he would like to add.
Hello everyone, a very warm welcome, and good to see so many of our regulars coming along, and also a very warm welcome if this is your first time. So just to adjust my microphone a bit. I haven't really got anything to add to that, other than to say that if you have any questions, then please just drop them in the chat box. We're happy to answer them there, or if they're longer, more detailed answers required, then we will do that on air for you. We focus primarily on the MT5 platform on Anna's machine, but I've also got the Ninja Trader running too, and we'll flip-flop between the two, and we'll try and pick out a few things. Just been watching the some pretty strong buying in the Swiss franc since we got up early doors, but that's now coming to a potential pause point, but we'll pick up on that later on. I'll pass back to Anna and we will get going.
This is just a slide from our Forex program. We've also taken the books, expanded on the books, and we've actually put together a Forex program. And I know we've got some of our students here in this session as well. And really, it places Forex at the heart of the markets comprising the four capital markets: bonds, equities, commodities. They're all interrelated. They all impact one another, but the one that really does, it's the first market that reacts to any news. It's the fastest market to react, and that is the Forex market. And if you don't understand this or appreciate it, then you see movements on the screen and you think, well, where on earth did that come from? It's the market where you will see sentiment reflected in sense of risk on, risk off, and that obviously is then translated into what the equities are doing, what is happening in the bond markets, and of course with commodities, with the US dollar. So there's a lot of stuff to take in, and you think, oh my goodness, when you start, you think, how am I ever going to make sense of all this? But we always say you really just start understanding the chart, what is happening with the individual currencies, because this is the other thing, our approach to this market, although I have seen, and people have told me, that more and more traders, educators out there have now begun to really take an approach that we started how many years ago? 5, 7 years ago, before the books were published, before the program came into being, as it were. Forex was the last market for us. We actually started in futures, God help us, FTSE 100 futures, which is probably the last market any newbie trader should start with. And we did stocks, and we've done options, and not a lot of commodities, but and then Forex with the markets. You have to remember the context of 20 years. Things are very different now. I mean, I think, is it the 30th anniversary of the internet today? I think I saw it on Google. We don't appreciate how things have changed in such a relatively short space of time. You had Big Bang. You had retail traders like us suddenly being given access to very sophisticated, very complex financial products, and Forex then came along, and you could sort of place a trade, or whether you thought something was going up or down. But we kind of sort of pretty much realized that these were currencies, these were each an exchange rate, if you like, actually represented two economies. We kind of took a very common sense approach. That's what I'm trying to say. And the books came along, our trading developed, and from that we then wanted a means to, if you like, disassemble this complex market. On the surface, it seems very simple. All you're asked to do is something going up or going down, but it's actually quite complex, the movements, because you, for a start, you're trading a pair, as you know. So what is driving that pair? Is it the first currency or the counter currency? Setting aside whether one of the currencies in the pair is also a proxy for sentiment, for example, with the yen, so there's all that overlaid on top. So we wanted a way of being able to identify what was moving at any given time, which is a very roundabout way of saying, which is how we developed the indicators that we have for Forex, and they've all come together in the currency dashboard. They're all available individually. The CSI was the first. Then we developed the matrix. The CSI, actually, the individual currencies, as David has said, he's been watching the green line. This is the Swiss franc. There's been some strong buying in the Swiss franc this morning. Whether that's the SMB, we don't know, but that's what the CSI tells us in any given time frame. But then we wanted to take that one step further. We wanted to say, well, that's awfully interesting. We compare them on the CSI, but actually what you really need to see is, for example, this yellow line is the pound. The pound is very important. On this screenshot, it's being sold. Yesterday, as you know, there's been heavy buying of the pound. But then you want to see, well, where's that buying the strongest, particularly if you're looking to take the most, the best trade, if you like, in the pound complex, which is why we developed the matrix. This sort of ranks all the pairs, and you can select an individual matrix for a complex for a currency. I'll show you when we have the indicator up on the live market. Then the next stage we want to take it one step further. We want to see that the momentum is, which is the one that's moving the strongest, as it were, which is where the currency array come in. And finally, we had the currency heat map, which allows us to see the performance of the currencies across time frames. So it's not just in one time frame, but it's in, as you can see here, across here. And we put it all together to give us the best possible picture of what is happening in the currency markets, so that it can help us select the best trade for us, the strongest, what's moving the strongest is a pair that's coming to a point of reversal. So the best way to see all this is obviously on the charts itself. So I'm just going to come out of that, move it over. And before we actually developed the indicators to help us, the way we would do this is we, as I said, we would have what we call a complex for a particular currency. And for those of you who haven't invested in our indicators, that's perfectly fine, but this is how you would do it. You actually bring up this is for the pound. As you can see here, this is all the pound pairs in its own complex. I've just got the daily chart up because obviously yesterday this dramatic news that Theresa May had rushed off to see Juncker and been given some kind of concession on the Northern Ireland situation. I have to say here, just as an aside, David and I are old enough to actually have lived through the awful times when there was the bombings in the city, and we were very close to the bombings. Is it the last one? Was it Surrey Quays when they blew up? When Surrey Quays, at the time we were actually working as well in the city, and we really, I wouldn't say we were actually in Surrey Quays, but we were close enough to actually have felt the result of that bomb. So we understand the political sensitivity of anything to do with Northern Ireland, and why not? People lost their lives, in the most horrible way. And this is just a personal thing, and I feel I really need to say it. The Northern Ireland issue has been kind of hijacked in these negotiations in a really most cynical way, and it's clearly by people who don't understand the sensitivities for Northern Ireland. And certainly here, we were touched by it when we lived in London, and nobody would ever want to go back to that kind of situation. So what happened with the British pound? It soared up because there's alleged concession on this backstop, which wouldn't keep the UK in permanently, the Northern Ireland locked into the EU, in other words, separated from the mainland. But the whole withdrawal agreement is much more than the Northern Ireland. As I said, the Northern Ireland it's been used as everyone's focused on that, but actually whether the vote she's going to get through the vote this evening still remains very much in doubt, as it were. And what you're seeing here in this complex for the pound, you can see the daily candles, very, very strong up candles, obviously going down here in the euro pound because the pound is the counter currency here. One of the most interesting is actually on the pound Swiss, where in fact it triggered the volatility candle. It actually moved, it's been moving off the volume point of control. These little purple dots tell us that volatility has come in, and it did in spades and momentum. What normally happens with the trigger of this candle, then the price retreats to within the spread. It did, it then moved higher. We're now getting a sort of shooting star. And it's also a great example of, if you like, the market reacting on, because it was really, it's kind of rumor, because yes, something has been agreed, but no one has seen the details. And this is something you just have to get to grips with, well, in whatever you trade, but particularly so in the forex market. And what the indicators do is they help to keep you on the right side of any of these rumors, and obviously, perhaps take a trade on what they call the fade. So, this was the move very late last night. Actually, it shot up across all the complex. But if we have a look at the CSI and see what the pound is doing at the moment, this is the 3-hour chart here. This is the move higher. Let me move to the hour, which is probably much more appropriate. Right, so we've had a bit of a sell-off in the pound since then. As always, with overbought and oversold, currencies can start to turn down, and then they can start to drift in the other direction. But the other thing about the CSI is, yes, we've got the British pound. Yes, there's lots to talk about the British pound today, and it's all week actually, because there are more votes coming along this week. But what you also have to try and you have to put it into context, because while there may be too much volatility in any pound pair, you can look on the CSI and see what else is moving. As David has said, there's been some buying of, well, quite strong buying, isn't it, in the Swiss franc? Yes, there's also buying of the euro, and you think, well, the British pound, it's just too, it's too unpredictable. Something like that happens, the whole market is turned upside down. Let me go and see something else. If you are a British pound trader, then again, what the CSI will do, certainly on the faster time frames, you just have a look, set it down to the 5 minutes, see what's happening. It just loads up in a second. Sometimes it takes a bit of time. There we are. Well, we can see here, really, it sold off, then it bought, sold off, but it's been, you know, it looks as though there's been quite a nice strong move since we've been on there. And look at the euro. The euro has been rising really strongly, possibly looking for a reversal. This is on the faster time frames. Possibly there's an opportunity to take a quick short reversal trade, but we'd have to go and investigate. You know, what's down at the bottom? Well, you've got the dollar. The dollar's been bought again. Maybe it's something on the euro dollar. We will have to go and see, because there's certainly no news to do with the euro dollar. Let me just have a quick look on Forex Factory. No, it's really all the British pound. This afternoon we've got CPI for the US. And for those of you who want to know what the time frames are for the British pound, let's have a look. Where have they got it? Here it is, right. This is the timetable for today. There's a cabinet meeting, 11:15 afternoon, then that's when the debate happens, and then it's got the votes. So in between that, expect rumour, speculation, sort of general comments, and that's all going to be reflected in the pound. And whether you choose to trade it or not, that's very much going to be a personal decision. I'm actually going to pass to David, because I know he's been looking at some pairs and seeing how. Is that okay, David? I'm just going to move to you. Yep, and I will go back and I'll. Sorry? Leave it there for a minute. Okay, fine. I'll turn myself off.
Thanks, darling. Just to what Anna was showing there really just does encapsulate one of the other issues that we have to deal with in terms of timescale, because Anna pulled up the hourly time frame for the CSI, and there you had a situation where the Swiss franc was just rising from oversold, hadn't moved very much. Whereas when you go to the 5 minute time frame, or look at it on the NinjaTrader as well, 5 and 15, we've had a very strong rally. And really, that's all this comes down to. It's selecting your time horizon carefully and trying to stick to it, because it is so easy, and we've said it many times before, is you start off on one time frame, you maybe start with a 5-15 combination, and before you know it, it's not quite going in your way, so you step that down to maybe a 30 minute, an hour, or maybe even out to a 2 hour or 4 hour, just to see what's going on, just to see that you know, actually your original decision was correct, but you're perhaps a little bit early on the trade. We all do it. It's human nature, but it's so important that to as I've said, the analogy I always use is of a blinkered horse, because horses that are blinkered get distracted, and they're blinkered for one reason, and that's to focus on the finish line, or focus on what they're doing, focus on their job. And it's the same here. You have to think of it as blinkering yourself to just try and focus in what you're trying to do in that time frame. And you can be all things all the time. I was going to say to all men, but all women as well, obviously. You can be a scalping trader, you can be a longer term swing trader, you can be an investor, you can be lots of different things at different times, but it's just identifying what it is you're trying to do on that particular position and trying to stick to it. It's not easy, but you have to force yourself to do it. And really, the Swiss franc is a nice example. If you just switch over, we'll just switch over to NinjaTrader. Just bear with us a moment. Sorry, just switching screens. Alan was just on the answering question, I think, or on the chat. Hold on a minute. Here we go. Hopefully you can see my screen. This is on the Swiss franc, which I highlighted literally 10-15 minutes ago. It's still continuing. It's been a really, really strong move higher. But you know, we're spoiled for choice. Going back to the CSI, let's just quickly zip over there, and then we'll come back to these time-based charts. Where are we? There we are. This is what we're seeing. This is on 15. We've got this very strong buying on the Swiss. Coming off a little bit on the dollar at the moment, but we've also got very strong buying on the euro. Let's go down to the 5 minute. There it is on 5. So we've got this continuation of Swiss franc buying. We've got very strong euro buying, selling of the British pound. The dollar is kicking up a little bit, but the strength in the Swiss the Swiss franc is strong enough to continue driving that for the time being. Let's just head back to the charts. There we go. And that's what we're seeing. I've got the 3-minute, the 5-minute, and the 10-minute up here. Down at the bottom, I've got the 30-minute. I've got the Renko in the middle, which is just fantastic to use with time-based charts because it smooths out these little pullbacks, these pauses. Not a flicker of change on the trend monitor. The trend dots have changed a little bit. They always do because they're very close to the market. We get the pivots working here. We've got the accumulation distribution indicators working exactly the same way on the Renko charts and also on the MT5 as well, in exactly the same way. Down on the bottom right here, we've got the daily. What I really want to show you, just pop this up, because this just encapsulates staying in a trend, reading the chart, looking at the volume that's coming in. We've got this ton of volume coming in here on 3 at the moment. So it'd be interesting to see what happens here. But if we just step back a little bit and just really walk through the chart. Now, this is 7 o'clock, so this is really our entry point. This is Europe starting here. And this is 8 o'clock, this is the UK. So the volume here is all UK volume. The volume here is European volume before we get into London. You look at little moves like this. I've just got an eye over on the right-hand side. You look at little moves like this. What have we got? Falling price, falling volume. Does that mean we've got heavy selling pressure? Answer, no, it doesn't. We then get the rally. We're moving up. Sorry, just let's pull that back a little bit. We've got a lot of volume coming in. That's the volume coming in there. We then get the market rallying, and again, we look for volume analysis. We look for confirmation. We look for anomalies. We've got a bit of an anomaly here. What have we got? We've got rising price. We've got falling volume. Is this going to move much further? It doesn't tell us that it's going to reverse. All it's telling us is that for the time being, the trend run that we're seeing up higher, moving higher, is just running out a little bit of steam. What's interesting is this phase of price action in here, because what we're seeing is a lot of buying support coming in. We're at the volume point of control, so we know we're in a pause point anyway, so congestion is to be expected, which is no great surprise. But then what we see are these lots of anomalies, lots of volume, price action to the downside, reverses, bounces off a support platform. You're looking at buying. This market is not ready to fall yet. We've got the same here. Little move down, goes back up, lots of volume under there. It's anomalous. It means the market is buying. The market is buying. The market is buying. It's not ready to fall yet. And then up we go. Into the next phase of price action. A little bit anomalous here. We get this widespread up candle. Okay, that's our benchmark volume. Let's say it is. The next candle comes along. What have we got? We've got higher volume, but we've got narrower price spread. So what's this telling us? It's telling us that we're expecting some weakness. It does not mean necessarily that we're going to see a reversal. All it's telling you as an intraday trader, a scalping trader on a 3-minute chart, is that we've got a lot of volume driven in, but we haven't seen an equivalent move in price. If this is our benchmark, and there's no reason to say that it shouldn't be, because it's a nice flat top candle with solid volume, and we know we're comparing like with like because we've gone through the London Open. Volume comes in here, but only half the price spread. If this is true, then this should be up here somewhere. If this is our benchmark, then this candle, the close of this candle should have been up here somewhere. It isn't. It's half of that. It's even got a little wick to the upside. So what are we expecting? We're expecting some weakness to appear, which it does. The market reverses. What does this tell you? It tells you you've got falling volume again. Well, if this market is truly going to reverse pretty strongly, then this price action associated with this volume is not going to do that. You expect to see higher volume coming in, because if the selling pressure is increasing, you want to see the volume rising. It isn't. It's falling. So what is that telling you? It's telling you, as an intraday trader, okay, don't worry, don't stress, nothing to worry about. This is just a pause point. Probably going to see this market maybe pause a little bit, maybe go into congestion phase, which is what it's done. Now we're starting to see the volume come back. Lots of volume under this one, lots of volume under this one, even more under this one. So we've got rising prices, rising volume, good strong price action. You know, this market is going to carry on for the time being. And the trend monitor throughout that has kept us in. It hasn't flickered one iota. Yep. Let me talk about the VPOC on this one as well, just to highlight. This is on the 5-minute. And this is, again, this is putting this all together. The pieces of the jigsaw are all there. You just have to read them. But using multiple time frames, will give you all those other aspects which help to confirm what it is you're doing. If you're an out and out scalping trade, you're on a 1 minute, 2 minute, 3 minute, whatever it may be, and it doesn't matter. This approach applies whatever time horizon you're using. It's a multi-time frame approach. So as a longer term trader, you might use a 4-hour, daily, weekly, whatever, monthly. You know, the same principles apply whether you're scalping or whether you're swing or trend trading. Just to talk about the volume point of control, but just to highlight these candles. As these appear on 5 minute, what are they telling you on 3? Well, if you're not seeing them on 3, they're certainly giving you a heads up that you expect some congestion to build. We've got it here. We get it again here. We've now got the volatility indicator triggered again. Are we going to see it repeated? Ton of volume coming in under this candle. So, you know, there's no reason, there's no anomaly here. All we've got is extreme price action moving very fast. So we just have to be cautious. If this candle closes well away from this area, that's fine. It's just going to continue, but we have to wait and be patient. It's just giving us a heads up. Going back to the volume point of control, the VPOC indicator, the yellow line here, is the fulcrum of the market at that point, if you will. It's the point at which the market moved into a phase of price agreement. In other words, there was no strong bias to the upside or the downside. Participants were agreeing that this was the price at which the market was going to settle for a period, because what the volume point of control does, it brings in time into the equation in the volume price relationship. And what it displays on the right hand side is the layering of volume that sits in all these regions. The heaviest concentration of volume is around the volume point of control itself, because that's that's just the way it works. That is the heaviest volume and denoted by the VPOC. Now, obviously the VPOC will move. If a market moves into congestion, this is not a static thing. This will move up and down as price moves into another phase, maybe moves into another congestion phase. And if it's an extended congestion phase, then the volume point of control will move to denote the price agreement. What we're seeing now is a very strong move away from the VPOC. The histogram on the right-hand side of volume gives us an idea of where volume is high, medium, or low. In other words, where we've got low volume nodes, for example, here, or where we've got higher volume nodes. And the importance of that, as far as trading is concerned, is that you use it in the same way as you would do with support and resistance. Traditional support and resistance is based on price, which is what these levels are, these red and blue lines on the chart. This is the accumulation distribution indicator, which prints the areas of price which have been tested and retested repeatedly, and therefore act as support and resistance. I'm sure you understand the principles of support and resistance. It's exactly the same on MT4 and MT5, where we have the support and resistance indicator. They are based on price. And on the NinjaTrader platform, the wider these lines, these dashed lines, then the more then the deeper that area of support or resistance will be in terms of preventing a move higher or supporting a move that's maybe coming to test a platform support. We have these two levels here. This platform, the lower level here, the blue level, that acted as support. As you can see here, it was tested a couple of times, in fact tested 3 times, held the price, and the price then pings away from the volume point of control. To the upside, very tight levels, but the upside, we have this ceiling of resistance. That was tested, it was tested again, and then it broke through. So from a trading perspective, you've got some fabulous levels here. If you were just getting into this trade as it moved away from the VPOC, then you've got some great places to position your stop loss, because if you're trading this one, then you want to be below all this lot, down under here somewhere. You've got in any reversal, you've got a huge barrier now of protection in place, and it's based on the price chart. It's not based on some money management rule. All I would say is that wherever you place your stop loss, it's got to comply with your money management rules, but you're basing your stop loss positioning on something tangible, which is the chart, which is price action. So if you're placing it under there, you've got this really solid, I hesitate to call it a barrier, but it's certainly a very dense hedge, if you will, of potential support should the market come back down if you've got your stop loss here. to be honest, if you've put your stop loss in here and you're already in this position, you're trailing it, then you're going to be moving it up and you'll be looking for other levels. And the way to look for other levels is to go onto some of the other time frame charts and just check out the support and resistance regions which are building there. We had very strong volume on this candle, very tiny wicks to top and bottom, but a ton of volume coming in. So this was all perfectly fine. And we also had a nice close away from it as well on the next candle, again with good volume. And we continue to move higher. We've got very light volume here on the 5 minute for the VPOC. So, we're looking at a further extension of this move as it rallies higher. You're dropping down onto, as I said earlier, dropping down onto the Renko. This is just a terrific chart. You're using a non-time-based approach as a blend with your time-based charts. Renko doesn't work on time, it works on the brick size, whatever that may be. And the issue that all traders have, and this applies whether it's a tick chart or which again is a non-time-based chart, or a Renko chart, or indeed any other non-time-based chart, is what do you set it to? Everyone has to guess if they don't have our indicators, because that's just a fact of life. So if you're trading this, well, do I go for 2 pips, 3 pips, 1.5 pips? What is it? What the Renko indicator does on NinjaTrader and also on the MT4, MT5 platform, it delivers the optimal setting for you. At the moment, we're running on 14. What that equates to is 1.4 pips in NinjaTrader. Just have to move the decimal point back 1. And as you can see, we've got pretty much the same indicators. I've got the trend monitor running on here. You can see here in these pullbacks, the trend dots work very close. They work brilliantly with the Renko, but they work very close to the price action. So as the price action pauses, the trend dot will change color, but you get not a flicker of emotion on the trend monitor itself, because the trend monitor takes a much more considered view of price action, whereas the trend dots work very close to the price action. You can see we've got support and resistance indicator, the accumulation distribution here as well. We then climb further, we then get a little rally reversal here, we go into red, but not a flicker of a change on the trend monitor, and off we go. We even had a grey trend dot down here. You can see up here, a little bit of a pause point, we've got a pivot here, a little bit of a reversal, no change on the trend monitor, we're still climbing. The trend dots have flattened a little bit, but still looking very bullish at the moment. Just go back onto our faster time frame, see what's going on. Let's go up to 3. That all looks fine. Okay, the volume's drained away a little bit. Got a lot of volume under this candle, and you might expect that it looks a little bit anomalous. And also you've got this falling away of volume here. So it's just, a warning signal, if you want. Like, you're looking at this, lots of volume. I would have expected this candle to be much wider, given that the previous two, looking at fairly similar. This is a nice candle, decent volume, very good volume under that one. Then we get higher volume under the next one, but perhaps not the price spread that we would expect. And also note now that the volume is falling away a little bit. But it's nothing to worry about per se. It's just giving you a little bit of a signal that, we've got a little bit of weakness on that one. Nothing that's going to frighten the horses for the time being. Just head over to the 5 minutes, see what's going on there. Similar sort of picture there. And of course, we'd head back to the CSI. Let's go and have a quick look at, see what's going on there. Okay, we're still up at the top there, very, very strong at the top there, the Swiss franc. Got the yen down here. Let's just have a look on 15. Similar situation. Yeah, we've still got plenty of buying.
I think it's the Swiss, I think it's the MSB coming in.
Yeah, probably the SMB. We've got very strong buying. And you've got very strong, really spoiled for choice. You've got such strong buying in the euro as well. You'd be looking at, really spoiled for choice. Euro, yen, can I pass back to you?
No, when you're done.
Okay, euro, yen, you've got euro, dollar, you've got euro, CAD here. Very strong selling in those currencies. So the yen, the dollar, and the CAD all falling nicely. Very strong buying in the Swiss franc and the euro. You certainly wouldn't go anywhere near the Aussie at the moment. It's just flip-flopping around. And it's another facet, if you will, of trading, of using something like the currency strength indicator. Not only does it tell you where to go and hunt out the best opportunities, it also tells you what not to look at. It's telling you right now, don't bother with the Aussie. It's not going anywhere. It's just flip-flopping around. It's wallowing, if you like, in a sort of choppy sea. It's not really going anywhere. There's no trend there at the moment, so it's pointless looking at that. Over on the left-hand side here, I've attached the currency matrix to the CSI as well. I've isolated out the Swiss franc. So you can see how strong that Swiss franc move is, and it's reflected in the ranking ladder. The strongest is the Swiss yen, but you know, you could equally look at any of these top 2 or 3 and you'd be spoilt for choice. Down at the bottom here, they're all aligned, so we've got a perfect full house across the currency matrix, really telling you about sentiment, how strong that sentiment is, and whether we are getting potentially to a point where we're looking for a reversal to develop. We just stepped down to the 5-minute. That's still looking fine. And if you went over to the hourly chart, for example, you would see that developing quite strongly there. And if you're trading on an hourly chart, then what you're likely to see at some point, and you will see it, of course, is you'll see these start to roll over. You'll see reversals and pulse points, which on your hourly chart will just be that. Whereas from a speculative trading perspective, speculative traders will be jumping in and shorting this, because I would be looking at this now. If I were not in this position, I'd be looking at it as a potential reversal, because these are very, very strongly overbought and these are strongly oversold. Very quickly head down onto the indices, just to see what's shaping up there. There we go. This is the dollar, the yen and the euro. Forgive me, sorry, wrong order, but we've got the yen here, the dollar and the euro on the left-hand side. You can see the strength of moves. There's the yen breaking down nicely. So it's really, you know, pick your poison. Which one do you want to trade on that one? And then up onto the dollar, there we are, strong, on the euro, strong move on the euro, breaking away from this congestion phase. So we've got some very solid price support in place should we see a reversal, but some nice strong buying on the euro. The dollar is perhaps the one that's stagnating at the moment, not really moving very strongly. Decent congestion phase. If we get a break below this level here, then we'll start to see that develop more strongly, but it's not really going anywhere at the dollar. So really the pairs to look at are the yen and the euro, and pick your poison from that lot. Can I pass back to you?
Yeah, sure. You can see my screen, and I'm actually looking at the euro dollar because there's a couple of nice, there's lots of lessons, VPA lessons, price action lessons, and also what the CSI can tell you in the slower time frames, and also give a hint as to possibly there's not going to be much going on in a faster time frame. Right, first of all, let me something I just want to bring to your attention. You might like to pop over and have a look at it. We talk about liquidity in this market. You'll hear about forex liquidity being, as a term, as an expression. Well, what does it actually mean? And it's also pertinent to how we view volume price analysis, volume in the forex market, the spot forex market. As you know, there is no central exchange, so it's an over-the-counter. So we can never really judge. We never know what the actual volume is of trades, because, as I said, there's no central exchange. So what we use is we use tick volume, we use activity, we use the noise of the market, if you like, to tell us whether a price is, something is moving or not. And if you're a student of VPA, you're either looking for an anomaly, or you're looking for confirmation that the move that you see on your chart is actually supported by activity. Overlaying that is market liquidity, session liquidity, and we always say, it's not an equally, it's not a market where there is equal participation over the 24-hour period. And came across this at my FX book. Some of you may have seen it already, but it's really, really interesting because it also has an impact on when prices seem to become very volatile. When there is low liquidity in the market, you will find a lot more volatility. It's just a characteristic of the volatility. You get volatility when the markets are, there's lots of participants, but it can be particularly, you can have a lot of momentum, even more momentum, when there is there are fewer participants. Now, what this does is actually, it's really, really interesting, because you can see here how the liquidity participation actually rises. This is 8 o'clock this morning, and we have the inrush as we normally do. But it's nothing like, if you look at yesterday, and what I was going to say, and normally I think I mentioned it in one of my Facebook posts, is the Monday after NFP is usually quite quiet, isn't it, David? We've had all the fireworks of NFP and we had the ECB. So this is quite interesting. So 8 o'clock comes along yesterday, and look at the liquidity that is dumped into this market. That kind of tells you, do you know what? It's, you know, there are a lot of participants. Something is, you know, it's going to be quite busy, as it were. So that's interesting from this perspective. Then you pull your, you know, you move your cursor along, and you have 12:45. Then you have New York, which is sort of quite variable yesterday, wasn't it? It was up and down a bit. That also helps to explain the price action that you see on the chart. Now, the move in the British pound yesterday was at 10 o'clock, David. 9:30, 10 o'clock. Yeah. Something like that, 9 o'clock, 21, 22. But look at the liquidity. It's a very thinly traded market. There's not a lot of participant, which also helps to explain the volatility and, if you like, the momentum. The price kind of runs away from itself. When that happens, you almost know as a trader that the price is going to come back anyway, because there's not enough in there to keep the momentum going. And it's just a really nice way of, you know, checking what the liquidity is at any given time. And we can see at 8 o'clock, it's okay, but it's you know, this market is one of noise, the signal and noise. And what the noise tells us, if there's a lot of noise and a lot of participation, is great, but there's a lot of noise and not a lot of participation, well, that's not so great. It's worth checking out. And, you know, you can just watch the charts and watch the liquidity and see how that affects the price action. And we can see here on the euro dollar, which I said we were looking at the strong buying of the euro. By the way, it doesn't invalidate volume price analysis, because we read it, as David has shown, we read it in context, and we in the context of the session that we are analyzing. I just want to jump back on the euro dollar. This was Draghi. If you use XM, as I do here, because I like the Dixie, do you know what they've done? They've now added Sunday, which is a real pain. I couldn't understand why I had these gaps on my daily chart, and then I put my cursor over it, and of course that's the 9th, the 10th, the Sunday, wasn't it? 10th, 11th, 12th. Yeah, today's the 12th. Yeah, so, which is a real pain in the neck, actually, but never mind. This is Draghi. Huge down bar, great if you were short the euro. Volatility was triggered straight back into the spread of a candle, and in fact the euro has been actually bought very strongly since then. But if you understand, you know, how volatility works with the trigger of this candle, you would have been, you know, you wouldn't have carried on selling the euro dollar. You would have been very confident and taking a trade to the long side. Now, what's happened this morning is, let's have a look at the CSI very quickly. That's the heat map. Let's have a look at that one. Where is it? I'll find it in a minute. I seem to have lost it. Oh, well, never mind. Oh, let's bring it up here. All right, what I've done here, let's move this to the 5-minute chart. I've actually isolated them here. Here we are. This is the moves that we're seeing. This is the strong move high in the euro. This is the fall in the dollar, which hasn't been sort of as strong. So it tells you that has been driven by strong euro buying. And what I have here is the Renko I have here that I've set up on MT5. This is based on the ATR. I haven't set a fixed value to it. And what the value is actually moving at 2.13 pips per brick, and that I've just left the system to tell me which is the optimal. So I've just left it that as it is. The move higher here, we actually had a move higher, then we had a sort of congestion move lower, but the move higher is really mirrored from this point here. There we are, 8:22 this morning. There we are. Sorry, I'm talking about is this bit, this move higher in the euro here, in the euro dollar, as shown by the Renko. What the Renko will do now, it will help to keep you in. If this is going to be just a minor pullback, and we can see it on the time chart that we can see, I've gone. Can you hear me, David?
Yeah.
You can. Oh,
Yeah.
I thought I'd disappeared. We can see it here on, we've got a little shoot, we have the move higher, slight falling away of volume, congestion, we've got a little shooting star, and then now we are moving lower. Whether that constitutes a tradable reversal, we will have to see, and also wait for the Renko to actually change as well. And the first change I will wait for is the actual change in the trend dots, and also the CSI. Where is it? I've lost it now. Keep losing it. There we are. Let me put this back again. Let me move it over the other side, and then I know where it is whenever I need it. Right, and we can see here on the 5-minute chart, we can see the rollover of the euro and the turn up in the US dollar.
You've got the New Zealand dollar clicked on.
Yeah, I've got the, have I got the New Zealand dollar clicked? Oh, mustn't do that. There we are. Let's have the New Zealand dollar clicked on and off as well. And what I said last time, I think it wasn't in this session, it was in the Ninja session, is the other way of using the CSI is this, which is really a very subtle way of using it. If you go up to the hourly chart, often you'll see lines moving in the same direction. As David said, when they're moving in the same direction, there is no divergence, there is no strong force pushing the currencies one way or another. And you would think, oh my goodness, well, what does, I either have to be patient and wait for the divergence, which is what most traders wait for. But what it also tells you, if you look at a slower time frame, such as the hourly chart, and just suppose you were a Euro Swiss, this was one of your pairs, and you can see on the hourly chart that they're actually moving quite strongly in the same direction. What that also tells you on the faster time frames is you could see divergence on a faster time frame. So if we move to here, no, they're actually still moving in the same direction. I'm trying to find an example of a pair where they're moving in the same direction on a slower time frame, but you are seeing some divergence on a faster time frame. And what that actually tells you is that there is an opportunity, but you have to be aware that is more akin to, it's a sort of swing trade opportunity, that the movement in the lines going in the same direction on the slower time frame will actually, you will have a boundary, you will have a ceiling and a support, and usually it will be trading around the volume point of control. But what I'll do for next time is I will find some examples, because sometimes in the live market, certainly on the it's quite not difficult to spot, but trying to spot them and doing everything else, I will take some screenshots. Yes, have you got some? You've got an example? Yeah.
No, can you just explain where you find the docking for key?
Oh, sorry. Yes, I do beg your pardon. I will come to that. There's a very cool feature of MT5. What I'm going to do for next time is I will look for specific examples where currencies are moving in a congestion, in a range. Let's say a range. They've got a very, they are bounded by resistance, a strong resistance and a strong support in a slower time frame. Then look at how is that reflected in a faster time frame. Maybe you like to trade the 5-minute chart. Well, it is possible, but then in a way you use the congestion, the range, the pairs that are range bound in a slower time frame actually to your advantage. That's what I'm trying to say, because traders always get a bit sort of nervous about when markets are in congestion, and in fact you just have to recognize that fact, but you can take advantage of it if you understand the price action and the price cycle. Is there anything else have I missed on that, David? I think I've said everything. Right, okay, docking. Right, with MT5 you can move charts out of the monitor. I've got multiple monitors. It's called docking. You just click the dock. You can't modify them. You can't go and change time frames or anything. But what you do, just move them over. So it disappears onto another, on my screen on the right-hand side, and then you just bring it back. And then if you do need to change the time frame, you have to undock it, and then you can change the time frame. And it's just a really nice feature. And whereas before they always had to sit at the bottom of the toolbar here, whereas now you can just whiz them over onto a different screen, and you can have more than one chart basically open at any time. And just looking at the euro dollar here, we've got this little rollover here. It looks like possibly it might be setting up for just a very quick scalp. But it's looking at liquidity, going back to the liquidity issue again. You know, for London, would you have expected more than that, David? Yeah, I just said more than that, but it also tells you you're not going to get. It's not going to, you know, low liquidity can provide, you know, price spikes and things going a bit haywire. But when it's all a bit sort of pedestrian and a bit ploddy, that also tells you that you know, moves are going to happen, but they're going to take a little bit more time. Does that make sense? Is there anything you want to add to that? Right, let me just see if any more questions. What are we waiting for?
Sorry, just deciding where to go next. Move this a moment.
I'm talking to myself here. Right, I think we'll just wait for GDP and the manufacturing. And what's the pound up to at the moment? It's sort of at the top, isn't it? Let me just, yeah, it's flat on the top. Is that the 5 minute? Yeah, it's okay. Sort of deciding what it wants to do, basically. Okay, all right. Can I come over? Have you got something you want to show over there? Kiddo? I'm just going to move back to David and see while I just wait. I'll get my profile out of the British pound.
Just changing screens. Should be coming up in a minute. Hopefully you can see them. Yep. Can you see my screens? Oh, sorry. Okay, brilliant. Back on. Just got the Swiss yen running as we had before. I hopped over onto the euro yen as well. And as I said earlier when I was talking, you're always looking for these anomalies. I mentioned this candle here with the relatively narrow price spread and the highest volume, indeed the highest volume of the session. This is 7 o'clock, this is Europe, right the way through to where we are at the moment, just coming up to 9:30 UK time. And it's one of the facets of volume price analysis. When you see an anomaly like this, you tend to get terribly excited and think the market is going to change direction on a sixpence. Occasionally it does, but generally it doesn't, because these changes in sentiment take time. They generally don't happen on one candle. You do see it. I have to say, you are going to find examples where you've got a really strong hammer, for example, or a really strong shooting star, a ton of volume comes in and the market immediately reverses on that single signal. It happens. It's not the norm, though. Normally what happens is you see these signals building and the market then takes a little bit of a time to reverse. Because if you think about it, it's exactly like the oil tanker, which I've used many, many times before. If you switch the engines off, it'll carry on under its own momentum for some time. The market's the same. Buying and selling doesn't just stop instantly. It takes a while for that sentiment to move through and for that change to be reflected. And what we're seeing here, we saw this signal come in and we think, okay, fine. That doesn't look quite right because we've got too much volume for that particular candle. If you use the previous candle as a benchmark candle, then this one should be probably down here somewhere, you know, all things being equal, but it's not. So we know there's weakness coming in, and that's what we're seeing right now. We're starting to see a little bit of weakness come into this move. We've had a very strong rally, and let's face it, to be honest, you know, there's an awful lot of traders cashing in now. There'll be a lot of people closing out positions. We've had a nice strong rally higher. So inevitably you will see some closing of positions coming into the market, which will be driving this a little bit off the highs, and that's what we're seeing right now. But if you go over onto the hourly CSI, then you know the move there is just starting, and this is what it comes back to all the time: is What is it you are doing? Are you on this 3-minute chart? Are you on this 5-minute chart? Or are you down here somewhere on the 30-minute where we've got a volatility triggered? So from a scalping perspective, we know we're expecting some congestion to build at any rate because the volatility has been triggered on 30. So we have an understanding of what to expect next as a scalping trader. But as a longer term trader on this particular pair, this move is really just getting underway. It's getting fired up, down onto the hourly. You saw on the hourly CSI on Anna's machine on the MT5. It's just the Swiss franc is climbing its way off the oversold and is rising quite strongly, but it's got a hell of a long way to go on the hourly time frame and out to the 2-hour and the 4-hour. So it all comes down to this business of just teasing out what it is you're trying to do and in what time frame. We can switch over to the euro yen. Let's just see what's going on over there. Switch those over. Pretty similar picture, really. And again, looking at the VPA, you've got a nice example here. You've got falling volume, you've got rising price. What is that telling you? It's telling us weakness, because if that were not the case, we want to see rising volume. We haven't got falling volume, we've got rising. And in addition to that, this price action is also classic of a pause point where you've got narrowing spreads. You've got this, what I call catenary price action, where you've got this arch being built of narrowing spreads. The market's climbing, but the actual high of the session is narrowing. It's not climbing at the same rate, and you're getting this narrowing of spreads. So again, just purely, if you were just a price action trader, you'd be looking at that, and that's not a strong signal. It's a sign that the market is getting a little bit tired maybe, and that's what you expect to see. Then you've got a little bit of weakness coming in here with this volume. Next down candle, volume falling away. So you've got the inverse again. You've got the inverse of this really. So you've got falling price, falling volume. Because when markets are falling, if they're going to fall strongly, if you get a price waterfall developing, then you are going to see falling price and rising volume. That's what you want to see, which confirms that this is a strong move. You've got heavy selling in the market, and you've got a price waterfall developing, and it's supported by the volume, which is rising. Where you've got falling price and falling, it's anomalous, because if this market is going to sell off strongly, you want to see rising. You want to see more sellers coming into the market. You're not. You're seeing fewer sellers coming into the market on a down move. So it's putting all these pieces of the jigsaw puzzle together. Just go up to 10, see what that's telling us. Similar sort of thing there. Perhaps not quite so clear. You've got volatility candle triggered on 10, so you might be expecting some congestion to build. Volume's fallen away here, but then you'd expect it anyway, because this was a very widespread candle. This maybe looks a little bit anomalous, because if you compare this with this, you had more than twice that, maybe even 3 times that, and the volume here is quite high. So you're expecting a little bit of weakness anyway. You've got a pivot coming into the downside here, so that's giving you a signal that perhaps this move isn't quite done yet, and maybe we're going to break to the upside and continue on higher in due course. Down onto 30. Nice rising price, rising volume. A little bit of a pause point here on some wicks at the top and bottom, but nothing particularly strong there in terms of signals. And of course, what you're also looking at the whole time is, just move that out of the way. Oh, go out of the way. Go away. There we are. You're always looking at the daily chart, and to try and help to give you some signals as to whether you're seeing buying coming in, whether you're seeing selling coming in on the day, what are you seeing on the day? And as Anna said, on the euro dollar, we had volatility triggered. We had it triggered here also on the euro yen pair as well. In fact, I think it appeared on several of the euro crosses, the euro pairs. Down onto the volume point of control. So we're now trading around the volume point of control. This is on the daily time frame. And what we're looking for now is for price agreement to move away from here. And as we move away from here, if we were going to break to the downside, happy days, because this platform of support held the price. But if we broke through that platform, had the market broken through that platform, then you've got a really, really strong move developing, because you've got an absolute ton of volume sitting up here. You've got the volume point of control itself, and you've also got some very strong price resistance, or it would be acting as price resistance. But more importantly, as you break to the downside, you've got very light volume down here. So the anticipation, the expectation is that had the market broken to the downside, you as a trader will be looking at this and going, happy days, I've got all this sitting overhead, I've got an absolute ton of pressure bearing down on this market, and moreover, the volume profile here is so light, this market is absolutely going to crush through that price region pretty easily because there's nothing in the way of volume to stop it. Up here you've got volume which is causing, the market will require effort to move through here because you've got a lot of volume. Once you get up to this region, it doesn't look much of an opportunity, but certainly from an intraday perspective, once you get to this level, if you're an intraday trader and you're looking at maybe the daily histogram for levels and so on and so forth, once you start to look at this region, if the euro yen gets up to this region, it should go through this pretty quickly because you've got very light price resistance and you've got very thin volume here. So this low volume node is terrific. If the market gets that far and you're looking at the daily chart and you're wondering what to do on the day as an intraday trader, that's one of the things you would look at. You'd say, okay, well, I've got low volume here. This market should go through here pretty quickly, all things being equal. Fundamentals, relational, everything else. But if we see good volume, we've got this low volume node sitting here, then that should be a solid move through there without too much trouble. And that's the way you use the volume point of control on all the various time frames. As you get to these regions, low volume, high volume, it gives you the signals as to what to expect in terms of whether the market is going to struggle at those regions or whether it's going to slice through them like a knife through butter, which it will through a low volume node, because there's two rationales to that. First of all, let's just pop this one up. First of all, the rationale is clearly at a simplistic level, if you will. We've got light volume here, so if the market gets this region, then it should move through there fairly quickly, as it did in the uptrend. But secondly, and perhaps a little bit less intuitively, is that if the market considered that area unimportant previously, why would it consider it important now? And that's a different argument, if you will, but it's the same rationale for the volume point of control, is that when the price gets to these regions, if the market didn't consider this important before, then why would it consider it important now? It wouldn't. And as I say, the other aspect to it is that once it gets to these levels, these low volume regions, you expect the market to move through pretty quickly because there's very little to prevent it. Simple as that. Very light price support below, and this may well go all the way back down to the volume point of control here at this lower level. I'm just going to pass back to Anna. Apologies, run way over time. About the wicks. Oh, sorry. Hold on. Just picking up some of the questions. Are the longer? Sorry, apologies. Did you answer all the questions or not? On the wicks.
No, I didn't do that one. I was doing about
Are the longer wicks the only way to identify stops being taken out by the, like I said, by the market makers? No, I mean, wicks are one, certainly for sure. That's a clear signal. But when you get very volatile markets, and you'll see this, you can look at any news item you care to name, but NFP is one classic one. What you'll often see ahead of that release is maybe a sharp move in one direction, which is promptly reversed. You see that a lot. That is stop hunting. That's taking out stops. That may or may not be with wicks. It doesn't really matter. What you'll see is rapid price action, volatile price action, where stop hunting is going on in a big time. But it doesn't have to have a wick to the candle. It can just be a straightforward candle. And then, of course, after the news release, you'll see it all the time. You'll see volatile moves. You'll see the price action move very quickly, very rapidly one day, one direction. It'll close off, and then it'll promptly reverse. And that is stop hunting as well by the market makers. It's simple as that. And the rationale that's always put forward by the media is that, oh, well, then the market looked at the headline rates and they looked at the underlying data, and that's the reason for reversal. I'll leave you to draw your own conclusions on that particular piece of analysis.
Right, just a couple of things before I let's have a quick look here. It's just to go back to the euro dollar, which in fact I had the hourly chart up as a kind of benchmark, but the other one to look you could also have is the 30, and also helps to explain the kind of weakness that we've seen come in. You can see here the volatility was triggered, very much moved back into the spread of the candle, so we kind of know what to expect. And when you see volatility triggered, via the if you've got the quantum indicators, then this triggers in real time. It doesn't wait until the candle finishes. It happens instantly as soon as that price action goes out of what is the average true range, which is the norm for this particular instrument. It will be triggered. Then the expectation, the very high probability, is that the price will retreat into the spread of that candle. And we actually saw a good example here earlier on this chart. Straight back, just went sideways, dipped lower. Never really. The way you then look at the candle, the volatility candle, is to gauge eventual direction, because it's not going to stay in the spread of the candle in congestion forever. Is basically, does it take out either the low or the high? And here it did eventually take out the high. Really, that's a very, very big candle there, and that's been that move. So if you were a bit more conservative, you would wait until the move had gone through that. But then what happened? Then you had another volatility candle come hot on the heels, as it were. But then the way to capture the moves earlier on is you then use the Renko and a faster time frame. And on the faster time frame, on the 3 minutes we have here, we had that little weakness coming in with the shooting star. Yes, it went lower. Volume didn't really support that second candle, that second down candle. Price support came back in, moved higher. Not a huge amount of volume to support that sort of bounce higher. So we've kind of got a double, was that a triple top, at least a double top based on those two shooting star candles. And comparing that with what you see on the 30-minute chart, it's not unexpected. So what does the CSI say? If I just move over there, this is the 5-minute of the CSI. You see the euro up here. You've got the dollar kind of turning up, so it looks like possibly that is going to move lower. The next question is, I'll pass back to Dave. Wants to say where. So are you just waving your? No, I'm just. You're putting your thumbs up. Where is it? The next question is, well, where is it going to go if it's going to carry on lower? And that is, well, the most obvious, pause point is, well, we've got this line here, which is the support and resistance. It's a thick line, thicker than the dash line, so that's reasonable support. 127.36. If it gets through there, you've got the kind of lowish volume node. No, but the most obvious first significant pause is back to the volume point of control, which is at about 1265, something like that, 1265, something like that. So that's how you would also bring the support and resistance levels that are part of volume price analysis. And of course, you could also say, well, what is the Renko actually telling me? Well, there's no change yet. We've gone into the grey. That's still blue. For an entry, we always say you must wait for the dots, and ideally for both the trend dots and the trend monitor to what I'm trying to think, come together. Yes, what's the word? I can't think of the word at the moment. They're really to qualify each other, as it were, because they have been developed to validate one another. That's the price. That's what I was going to say. If you you really want to be more as certain as it is possible to me. Now, one of the questions I had, let's have a quick look, is from William about multiple switching from MT4, MT5. The nice thing about MT4 and with MT5 as well is you can have multiple versions of the platform on your computer, and it allows you, if you've got lots of monitors, and it saves, is it the computer? It optimizes, yeah, the performance. And if you want to know how you can run more than one version of the MT4 platform and MT5 platform on your system, if you head over to Quantum Trading here, support how to install multiple instances of MT4 terminal, you can do it with MT5. It has to be the same account though. So if you have an account, whether it's a demo or a live account, it doesn't really matter. So what you do is you download it once, and then you can go and download it multiple times, and it allows you to have, you know, as many charts as you would like. But also is we want to have a look at, this is really interesting as well. We're waiting for the data for the UK. You can see here really very good data, but I think they're selling the pound, aren't they, David? Yes, I think it's sort of better. I think, as I said, this is under normal circumstances. Yes, Brexit Trump. So as I was saying, if you don't understand that, then you know you look at that and you think, oh my goodness, you know, why isn't the pound soaring again, as it were? Right. I think that's everything. I think we've done all the questions. I hope you've enjoyed it. Very quickly. Where am I here? Quantum trading. There we are. These are the indicators from quantum trading. And these are the MT4 and NinjaTrader. You can click on the icons here, but the individual indicators are featured a little bit lower down. You just click on that, and it takes you to this is the volatility one, the dynamic volatility. It's got the videos and all the support pages. Really explains how how we develop the indicators, why we develop the indicators, and what it can do for you. That's what I was trying to say. I referenced the education program. The details is over at quantumtradingeducation.com. All the details of the core modules are there, what we actually cover in the program. It's a very comprehensive program, fully self-directed. It can take as long as you like to to work through it. You really work at your own pace. Is there anything else you? And I always forget this. It includes the full package of indicators as well. You can buy one indicator, you can buy a bundle, going back to the actual indicators themselves. We always credit you, and if you buy the complete package, you will have any new indicator that we developed automatically added to your package, so you never pay us another penny. Is there anything else you want to say? Oh, someone's got a question about TradingView. Can you unlock the windows in TradingView? I don't know, Simon. I don't know enough about it. Do you know TradingView, David? Do you understand TradingView?
In terms of docking them, it's a very comprehensive trading package.
Do you want to explain?
Yeah. Just very quickly, Simon, TradingView is a very sophisticated charting platform. It's certainly more sophisticated than MT4, MT5 from a charting perspective, but then you would expect that because that's its primary remit, if you will. It provides a fabulous array of charting options. You can do pretty much what you want with it, any particular timescale, virtually every market. The other thing also I would say from our perspective is it also allows the indicators to be loaded onto mobile devices. You can run it on any platform. You can run it on a Mac. You know, you don't need Parallels, Windows, all the rest of it. So the only drawback is we haven't been able to load all the indicators to it because Pine doesn't give us the ability to develop some of the indicators. So you'll find we've got the CSI there. We haven't got any of the other forex indicators, but certainly the CSI. There's some indices. We've got the trend monitor. So there's a comprehensive package we've put together for TradingView. It's a fabulous platform, certainly well worth a look. I think you can try it for free anyway. You don't have to pay anything for it. You can start with free trials. I think you can free pretty much all the time. Although I think you get a lot of ads, but that's personal choice. Anyway, it's a fabulous platform. That's why we developed for TradingView, because it's a great charting platform. And I have to say, a lot of our customers actually run both. They have indicators on Ninja, MetaTrader, and they'll also have TradingView running alongside. And you do get a discount for that. So have a look at it and see what you think. I'm going to pass back to Anna just to wrap up.
Right. Really, all that remains is if you have any questions on any of the indicators, anything we've mentioned, and just anything really, VPA, the charts, issues with your trading, then just you're more than welcome to drop us a line, Anna at Anna Cooling or David at quantumtrading.com, and we'll be very happy to answer your questions. We are back on Thursday, lunchtime-ish, for the US session. We'll have a look, see what liquidity is like then. And we've got two webinars that day, but we will just be looking at the Ninja Trader platform. As David mentioned, just to go back on TradingView, if you do have any of the indicators on the other packages, and you perhaps want to have a TradingView version as well, it is actually a 50% discount on those indicators. So brilliant. Thank you so much, and enjoy the rest of the trading day. It's going to be a lot of fun today, and the rest of the week as well. But whatever you do, please stay safe, and we'll catch you next time. Take care.